Hello, everyone, and welcome to the weekly roundup. Today we will cover growth, interest rates, and earnings releases. Hello, Ben.
Hey, Eva,
Sunny day.
sunny days.
Spring is here, maybe.
Hopefully.
Okay, let's start with the macros. Trump again called for Powell to drop rates. Is there renewed risks to Fed's independence? And do we expect them to buckle under pressure?
Well, I think it's probably the question of the day, isn't it? I think it started last week, probably a week ago now, where we started to hear rumblings about his not being happy with what Powell was doing. Listen, Chairman Powell is a seasoned veteran of the investment markets. He comes from the Fed via private equity and hedge fund land. So I think somebody understands the market in intricate detail is him. When we had the Silicon Valley Bank issue, which was hard to believe, only March of last year, the credit market started to come under pressure, and we started to see some risk of contagion in the financial sector. And so we saw immediate action, not only from the Treasury but from him as well, to say, okay, let's see how we deal with the current issues and kind of be prepared for that. And in 2008, when we had this similar issue, we saw the financial system come under pressure, and Hank Paulson, love him or hate him, but knew how the system worked. And if we had contagion and the financial system stopped working, then they needed to take immediate and aggressive action. And Powell did it during COVID, similar issues. And so I would say he understands the financial system intricately and really a good steward as to what we need to do at this point. So I think it's a real risk that Trump's putting him into a terrible position. I think it's okay for him to not be happy with the direction and action, but trying to force him to cut rates and force him to lose its independence, I think, is a material risk to the global financial system if that happened. And even though he may want to cut rates, by Trump out there saying that he should do it, kind of puts him in a bit of a box. Because if he does cut rates, even though that's what the data is saying, then he looks like he's a bit of a puppet. So, based on his action and his history and his comfort, I really think that he will not bow to what Trump's saying to him, and I think he'll maintain the independence even to the risk of being fired. Presently, it doesn't look like he has the power to fire him. So I'd still anticipate that, we're a year away from that happening. And, I think some stability with Powell there is better. So I think if something else happens and he installs somebody that's a friendly, we'll say, I think that's a risk of loss to independence, and definitely not good for the financial system.
Yeah. So still speaking in interest rates, the IMF slashed the 2025 US growth forecast to 1.8 from 2.7, citing trade tensions. Will this also affect interest rate decisions going forward?
Yeah, I think so. I think so. I think that we've seen most economic forecasts start to be lowered. And so I think that coupled with we're starting to see it's at least not appearing too much in the headlines yet, but we're starting to see jobless levels increase a bit. And we saw Intel lay off a big chunk of their staff this week. And so when we start to see some of the higher paid jobs start to get cut when the corporate releases come out, that's certainly a negative. So you couple that with the fact that tariffs and trade wars are going to slow down the economy. I think that as a natural tendency to slow the economy, I think the one wild card, which is still, we'll say, up his sleeve, is if he decides to proceed with giving people money back from the Doge savings. And so if he gives everybody in the US $4,500, that's going to stimulate the economy. So that's a bit of a wild card that I think we need to pay attention to. But I'd say as a whole, what's going on certainly points towards things slowing.
Okay. A couple of earnings releases this week. Anyone worth noting?
Yeah, I'd say we saw Intel with their earnings, and they also announced the cuts. I'd say that was one that jumped out at me. United Healthcare, which was, I guess, a week ago now. I don't recall if we spoke about it. I think it maybe was a week ago today. And so that one was a surprise to the downside. But we're still in the midst of it here. We saw the banks start to release their earnings as well. I think time's going fast, as there's so much news that comes out every day that the markets move up and down based on the news flow as opposed to the fundamentals of the markets. But certainly so far, the U.S. financials have been better than expected, mostly based on trading. And so volatile markets increase trading revenues, so that supports it. Um, Again, the wild card in the financial sector in the U.S. is that mortgage rates are close to a near-term high, anyways. So that's something to be cautious of. So lots of mixed news going on, but the financials numbers have been pretty solid.
Yeah,
U.S. financials. Yeah, yeah,
yeah.
yeah.
Let's see the charts.
Okay. All right, so we are recording here April 24th around 1 p.m. And anything that happens after this time, we won't comment on. But certainly, I think this is and maybe answer some of the questions that you had, Eva, and that we've had over the recent and time. This is our update from the financial department, our economics team. And one of the things that I've seen more than ever is just the pace at which these numbers have been adjusted. And so data comes out, we have to change forecasts, comments come out, tariffs, trade, impacts, forecasts change on a continual basis. But I think more than anything, the one thing that Canadians follow quite closely would be this top line, certainly here. So we're talking about the overnight rate. And so what do we expect that to be at the end of this year? As I mentioned multiple times on our calls, that number has moved around from zero to where we are right now, which is we think there'll be three more cuts by the end of 2025. And that's going to change and adapt based on how long these trade and tariff wars continue. However, based on the current data we have, we think three more cuts this year in Canada. The second question I get is just around bonds. And so this would be the overnight rate. But then if we look at the bond rates here, so this would be a 2 year over the next 4 quarters, 5 year, 10 year, 30 year. And so I'd say as a whole, the most important thing, I guess, to look at is just the direction of this. So across all levels, you get an adjustment, you get a rate of change going from, at least in the 2 year, from 2.5 to 205. So certainly continue to think that rates come down all the way across the curve in Canada. And then if you look at where we are from a currency perspective, another, I think, important thing to pay attention to there is if we look at what the anticipation is, it looks like the actually Canadian dollar will strengthen. And so if we look at how that plays out, this is the inverse here. So you're looking at about 72-cent Canadian dollar right now. So we think we generally finish plus or minus a penny or two from current levels today. And if we look briefly down just into the US, and so, US is, we actually run our forecasts out to Q1 of next year, just to give context. So we're currently at 4.5% overnight rate, and we're saying that by the end of Q4, so the end of this year, 75 basis points lower than where we are today. I think, again, this is all contingent on how the trade and tariff wars last. And to your point, the IMF revised their forecast. So if GDP is slowing by almost a full percentage based on the data you referenced, that we're going to see this rate come down quicker than that. Same would apply here on the long end, as I mentioned, mortgages briefly. So U.S. mortgages are based off of this, which is the 30-year bond rate. So we generally think this comes down slowly, but I think this will be a real important one to watch because as we start to approach those 5% levels, that puts tremendous amount of pressure on the U.S. consumer. So certainly continue to watch that as we go. Couple things I guess to pay attention to. This was the U.S. Michigan consumer index, and so they measure a bunch of different things. And this particular one is the 5 to 10 year ahead inflation expectations. And so, we went for decades without anybody even considering inflation as an issue that we need to be conscious of. And so I think this is some immediate term bias. Certainly, we've gone through an inflationary influx coming out of COVID. And so that natural tendency is to think that inflation will continue to stay high and aggressive. That view that the tariffs will cause rampant inflation, I think, is wrong. And the current view of this report is saying, people are thinking that inflation is just going to run away from us at this level. I don't think that's the case, but sentiment is what's driving this higher, and as sentiment pushes things, there's always an opportunity on the other side of that trade. If this is how people are feeling, then that's typically how they're trading as well, and that has an impact as to what happens to asset prices, and something I think we need to be conscious of. So Argus, one of our partners, and so Argus is a great research provider from the U.S. They put out excellent research. I thought this is a great way just to think about, the world and how they look at the world. There's a bunch of companies that have really had a difficult time, and they call them their fallen angels. This is an example of one of these companies. AES Corp is a U.S. company that provides electricity. And so it's great to kind of look around the world and see where the opportunities are. This particular report, they look at 12-month rating, 5 year, and then how they rate within the sector. So this would be the fallen angels or the value opportunities in the world. So some of these companies are starting to show 6, 7, 8% dividend yields. So I thought this was a great summary to look at some of those companies outside of the big names that you see on the screen at all times when you turn on the news. I'd say last point, just to make a comment, we get lots of comments and questions from accountants and clients right now just around CRA and tax season. We went through a pretty good period the last couple of years where all the data was uploaded to CRA's website, and most information you could pull down. It was completely accurate and easy to follow and track. But at the start of this year, there's been a new process put in place, and there's been some validation issues. We at National Bank Financial, we've sent along the files and all the tax documents to CRA, but some of that's been slow to upload and get distributed into the client's hands. The information, if you're missing anything, if there's something you need, certainly let us know. But the data is there on our portal. All the details are within the tax files, and the gain loss reports, and extra reports you need is under the internal reports. So all the details are there you need for taxes. However, if there is something that you don't have, please let Eva or I know, and we're happy to help you get through that. But I know the tax season's been a little bit more difficult this year, just with the details being uploaded in the CRA system. Last thing, just before we go, any of the opinions expressed here do not necessarily reflect those of NBF. If you have any questions or concerns, please consult myself or your financial advisor, and happy to answer them at any point as well.
Thank you, Ben.
Welcome.
So what are we looking out for next week?
So I'd say there's lots to look out for. I know I've referenced this before, but I do want to bring it back up. It's called the Fourth Turning is Here, and so this is a book written by Neil Howe, who's an economic demographer, and he wrote his first book in the '90s just about the fourth turning. And it's unbelievable when you have a chance to look at it and read it and think about how the world evolves. And it does really feel like we're in that fourth turning moment where there's a lot of change going on in that world. So I think it's important to be conscious of that. There's great opportunities that come on the other side of change. So, we're entering a period of change right now, and we're doing our best to steer you through it. But as for next week, we start to wrap up the end of April. April's been an extremely volatile month, one of the most volatile Aprils of my career. And so as we start to wind up the month, we've seen a reasonable bounce back. A lot of the holdings that we added to in early and mid-April have bounced back quite nicely here. But certainly a bit of volatile period. So as we look at volatility, see if it ticks down. I know last week we were around 50% vol. We're still up. Volatility is still up 45% year to date now. So slowly grinding down, but the weeks continue to be quite choppy. And so I'd continue to watch and see if those levels continue to come down. The chatter between the US and China continues, and I think that'll still be a story that we need to be conscious of and pay attention to. And but as we get in the end of the month, we'll be watching to see how April starts to wrap up from here.
Yeah, and the election.
Of course, of course. How could I forget? Monday is election day, and that'll be fun to watch.
Yes, it will be. It will be. Is the market excited?
I think it's going to be a very close election. So I think it's going to be interesting to see how that plays out. I think the market's generally anticipating a liberal minority presently, but the polls are quite close, and so we'll have to watch and see how it plays out. I know based on an early polls that there's been more people than usual coming out to vote, increased commitment from both parties to get out and talk to people, as we spoke about earlier today. So I think that lots of people should get out to vote, and that's exciting because you do want Canada to come together, and you want as many people voting as possible. And so I'm optimistic for that.
Absolutely. Thank you, Ben.
Thank you.
Please visit, subscribe, and follow us on YouTube and LinkedIn at Hart Investment Group. The link to our daily financial heartbeats will be in the caption of the video. For our clients, please reach out to me if you have any questions or if you'd like to book a review meeting with Ben. Thank you, everyone, for listening. Bye.
Thanks. Bye.